Hi, my name is Nicole. I work at the Canada Revenue Agency, also known as the CRA. I'm very happy to be here today to talk to you about the disability tax credit and other benefits and credits that you may be entitled to. Given that we're meeting virtually, I wish to acknowledge the lands on which I am presenting from are part of the traditional territory of the Anishinaabe and Haudenosaunee peoples. This territory is covered by the Upper Canada Treaties, is within the lands protected by the Dish with One Spoon Wampum Agreement, which was an agreement between the Anishinaabe and Haudenosaunee to share and care for the resources around the Great Lakes and is directly adjacent to Haldimand Treaty territory. I also want to acknowledge the lands on which you are gathered from coast to coast and invite you to take a moment of silence to have a thought for the territory in which you find yourself. Today, we will cover the Disability Tax Credit, or DTC, and how to apply. Other benefits and credits you may be eligible for, including the Child Disability Benefit, GST HST Credit, Canada Worker Benefit Disability Supplement, and Canada Caregiver Credit. Non-refundable taxes you may be able to claim, including medical expenses and the Home Accessibility Tax Credit, and long-term saving plans, including registered disability savings and home buyers plans. I will conclude today's presentation by sharing the different ways you can do your taxes, going over CRA's digital services like My Account, and giving you tools to protect yourself from scams. The Disability Tax Credit, DTC for short, is a non-refundable tax credit that helps persons with disabilities or their supporting family members reduce the income tax they may have to pay. A supporting family member can be a spouse or a common law partner, parent, grandparent, child, grandchild, brother, sister, uncle, aunt, niece, or nephew of the person with the disability. The purpose of the DTC is to provide some relief for unavoidable additional expenses that result from living with a disability. It helps to offset costs other taxpayers don't have to face. Being eligible for the DTC can open the door and act as a gateway to other federal, provincial, and territorial programs, such as the Registered Disability Savings Plan, the Canada Worker Benefit, and the Child Disability Benefit. I will speak more on these programs shortly. When we talk about eligibility, it's important to note that eligibility for the disability tax credit is not based on the medical condition itself, but rather on the effects of a particular impairment on the individual's ability to perform basic activities of daily living. For example, let's say two people have the same medical condition and they both have a walking impairment. Over the same distance, one can walk at a reasonable pace, while the other needs a walker and must stop frequently to rest. Although these two people have the same medical condition, the effects are different. A medical practitioner has to certify that you have a severe and prolonged impairment and tell us the effects of that impairment. Eligibility for the DTC is based on the information they provide. Your medical practitioner must also tell us the year you became markedly restricted in a particular category of impairment. We'll explain the term markedly restricted later in the presentation. Please also note that you may not be eligible for the DTC even if you receive the Canada Pension Plan or Quebec Pension Plan disability benefits, workers' compensation benefits, or other types of disability or insurance benefits. These programs have other purposes and different criteria. The one way to find out if you're eligible is to fill out and submit Form T2201 Disability Tax Credit Certificate with input from your medical practitioner. Here are some terms we use when discussing the DTC. Marked restriction. You may be eligible if you have an impairment in physical or mental functions that is severe and prolonged, which impacts your abilities to perform daily tasks. A marked restriction means that you are unable to do an activity, or it takes 3 times longer than someone of similar age without the impairment, even with the use of appropriate therapy, medication, and devices. This restriction is present all or substantially all of the time, and the restriction has lasted or is expected to last for a continuous period of at least 12 months. The medical practitioner must also tell us the year you met eligibility criteria. This is not necessarily the date a medical practitioner made the diagnosis, but rather when you began to experience marked restrictions in a particular category of impairment. Life-sustaining therapy. Following recent changes to the legislation, their criteria for life-sustaining therapy is now met when therapy is needed to support a vital function at least 2 times per week for an average of at least 14 hours a week. This is true even if the therapy eases the symptoms. I will cover the recent changes to the legislation on the next slide. You must also have to dedicate time for the therapy. That is, you have to take time away from your normal, everyday activities to receive it. This time includes the time you need to set up a portable device. There are some activities that do not count in the 14 hours per week requirement, and some examples include exercising, managing any dietary restrictions or regimes that are not listed as included in the 14 hours, and travel time to receive therapy. And then we have cumulative effects of significant limitations. To be eligible for the DTC under the cumulative effects of significant limitations category, you must have limitations in 2 or more categories, with the exception of life-sustaining therapy. These limitations must exist together all or substantially all of the time and have a combined impact that is equivalent to being unable or taking an inordinate amount of time to complete an activity in one category, be present all or substantially all of the time, even with appropriate therapy, devices, and medication. Please note that when we say all or substantially all of the time, it generally means 90% or more of the time. Impairments can exist in any of the following categories: walking, mental functions, dressing, feeding, eliminating bowel or bladder functions, hearing, speaking, vision, and life-sustaining therapy. To be eligible for the DTC, you must have a severe and prolonged impairment in one of these categories, significant limitations in 2 or more categories, or receive therapy to support a vital function. As a result of new legislation, eligibility criteria for mental functions and life-sustaining therapy was updated for 2021 and future tax years. The list of mental functions necessary for everyday life was expanded, and the frequency of life-sustaining therapy was reduced from 3 times a week to 2 for a total of at least 14 hours per week. Also, anyone with type 1 diabetes now automatically meets the DTC eligibility criteria, and their medical practitioner no longer has to provide details of their therapy. Applications for the 2021 tax year or later will be reviewed under the new criteria. Applications for the 2020 tax year or earlier are assessed under the previous criteria. This means, for example, if you're applying for life-sustaining therapy for 2020 or prior years, the information provided by your medical practitioner on Form T2201 must show how you met the criteria that applies for these years. For more information on the disability tax credit and the eligibility criteria, go to the web address on your screen. There are 2 ways to apply for the DTC. The first is by manually filling out a paper form, T2201, which can be found on our website. When completing the T2201 manually, the following steps apply. First, fill out the sections of Part A that apply to you. If you want us to adjust your tax returns, make sure to indicate that in question 3 of Part A. Then take the form to a medical practitioner who can complete Part B of Form T2201. And finally, submit the completed form one of 2 ways: electronically by using the Submit Documents feature in My Account or Represent a Client, or by mail to your nearest tax center. Always keep a copy for your records. For more information on the Form T2201 Disability Tax Credit Certificate, visit the web address on your screen. You can also apply for the DTC using the DTC digital application. When using the digital application, follow these steps. First, ask your medical practitioner to fill out Part B. If you and your medical practitioner think you may be eligible for the DTC, you can direct your medical practitioner to the digital application for medical practitioners, which can be found at the web address on your screen. This service allows your medical practitioner to complete Part B of Form T2201 by answering a series of questions which will provide the CRA with the information needed to determine your eligibility. At the end of the digital application, a PDF will be generated that your medical practitioner must print and sign. Next, take the printed form from your medical practitioner and fill out the sections of Part A that apply to you. If you want us to adjust your previously filed tax returns, make sure to indicate it in question 3 of Part A. And finally, submit your completed form T2201 to the CRA. There are 2 ways you can submit Form T2201, as well as any related letter or document. The first is to submit electronically by using the Submit Documents feature in My Account or Represent a Client. Or you can submit by mail to your nearest tax center. Medical doctors and nurse practitioners can certify all sections on Form T2201. Other medical practitioners can also fill out Part B of your form, but they can only certify impairments under certain categories. For example, an optometrist can certify vision, a speech-language pathologist can certify speaking, and an audiologist can certify hearing. To find this list of medical practitioners that can certify certain impairments, visit the web address shown on your screen. Please note that the CRA never charges a fee to process Form T2201. However, your medical practitioner may charge you a fee to complete the form. You may be able to claim any fees you pay to medical practitioners as a medical expense on your tax return. Once the CRA receives your application, we will review the information you provided to determine your eligibility. You can track the progress of your application by logging into My Account. Once the CRA completes the review, they will then send you a notice of determination within 8 weeks. It may take longer if the information is missing. If the CRA determines that you're eligible for the DTC, you can claim the disability amount on your income tax and benefit return. If you do not need the entire disability amount to reduce your income tax, you may also transfer some or all of the disability amount to the supporting family member you identified on the DTC application form. If you were eligible for the DTC for previous years, but didn't claim the disability amount on your tax return, you can ask for adjustments to your tax returns for up to 9 previous years on your DTC application form. As we discussed, eligibility for the DTC is not based on the medical condition, but on the effects of the impairment. If your application is denied, you can ask us to review your file if you disagree with our decision or if your medical condition changes. Be sure to include any relevant medical information you have not already sent. Make your request for a review within 1 year of the date of your notice of determination. Otherwise, you will have to send us a new form T2201. As mentioned, after your DTC application is approved, you can claim the disability amount on your tax return. You can claim the disability amount for yourself, for a dependent, or spouse or common law partner. If you're eligible for the DTC and you are 18 years or older, the amount you can claim on your 2021 tax return is $8,662. If you're eligible for the DTC and were under 18 years of age at the end of the year, or if you are the parent of a child who is under 18 and is eligible for the DTC, you can claim up to an additional $5,053. Please also note that provincial and territorial disability amounts and tax credit rates vary among provinces and territories. Let's now go over the benefits, credits, and deductions you may be entitled to, as well as long-term savings programs provided by the Government of Canada. We'll start with the Child Disability Benefit. The Child Disability Benefit is for families who care for a child under 18 and is eligible for the disability tax credit. It is a tax-free payment of up to $2,985 annually. If you are already receiving the Canada Child Benefit for a child in your care who is eligible for the disability tax credit, you do not need to apply for the child disability benefit. You will get it automatically. The child disability benefit is paid monthly to the person who receives the Canada Child Benefit for that child. For more information on the child disability benefit, go to the web address on your screen. Next, we'll talk about one of the series' most common credits, Goods and Services Tax Harmonized Sales Tax Credit, more commonly known as the GST HST Credit. The GST HST Credit is a quarterly tax-free payment for people with low and modest incomes. It helps offset the GST or HST they pay on goods and services. To get it, all you have to do is your taxes every year, even if you have no income to report. This series will confirm if you're eligible and how much you will get when you do your taxes. Also, to support those most affected by inflation, the government recently doubled the GST credit for 6 months. You don't need to apply. This additional one-time payment started to be sent on November 4th, 2022, for those who qualified for the GST HST credit in October 2022. If you are eligible for the DTC, you may also be eligible for the Canada Workers Benefit Disability Supplement. The Canada Workers Benefit Disability Supplement is a refundable tax credit for low-income workers and their families. You apply for the Canada Worker Benefit when you do your taxes. Tax software will automatically calculate it. And if you file on paper, completing Schedule 6 will allow you to apply. You can also apply to receive up to half of your benefit in advance payments, which include the disability supplement portion. You can apply for advance payments through My Account or by mail. For more information on the Canada Worker Benefit and the disability supplement, visit the web address on your screen. The Home Accessibility Tax Credit is a non-refundable tax credit that you may be eligible for. You may be able to claim the Home Accessibility Tax Credit if you owned a home in Canada and you paid for eligible renovations to improve the safety or accessibility of the home for yourself or for another eligible individual. You can claim up to $20,000 each year in eligible expenses, and this can result in a tax credit of up to $3,000. You may be eligible for this credit if you are 65 or older, or if you qualify for the disability tax credit, or you may claim for a dependent if certain criteria are met. You can find more information on the Home Accessibility Tax Credit at the web address on your screen. We've talked about your income tax and benefit return, but what about saving for the future? So let's go over how the Government of Canada can help you save for long term. A registered disability savings plan, or RDSP for short, is intended to help individuals with disabilities who are approved for the disability tax credit save for their long-term financial security. Contributions to an RDSP can be made until the end of the year that the beneficiary turns 59. And the government will pay matching grants and bond amounts to eligible beneficiaries on or before December 31st of the year that the beneficiary turns 49. The government will pay a matching grant of between 100% to 300% into the RDSP, depending on the beneficiary's adjusted family net income and the amount contributed. An RDSP can get a maximum of $3,500 in matching grants in 1 year and up to $70,000 over the beneficiary's lifetime. For low and modest income families, the Government of Canada will also pay into the RDSP with the Canada Disability Savings Bond of up to $1,000 per year for a maximum of $20,000 over the beneficiary's lifetime. No personal contributions have to be made to get the bond. It will automatically be deposited into the RDSP of those beneficiaries that meet the income threshold. While you need to be eligible for the DTC to open an RDSP and make contributions, you will not have to close your RDSP if your DTC eligibility changes. Both the grant and the bond are administered by Employment and Social Development Canada. For more information on RDSPs, visit the web address shown on your screen. The government has launched the new Interim Canada Dental Benefit. This benefit provides financial support for families who have an adjusted family net income of less than $90,000 and have out-of-pocket dental care expenses for their children under 12 between October 1st, 2022 and June 30th, 2023. If you are a parent or guardian of eligible children under 12 years old, you will have to attest that your child does not have access to private dental insurance and your child's dental costs are not fully covered by another dental program provided by any level of government. In order to apply, remember that you need to be receiving the Canada Child Benefit for your child and to have filed your 2021 tax return. Also remember that you must keep your receipts or records from your dental appointments for 6 years. Depending on your net income, your non-taxable Canada Dental Benefit payments could be as high as $650 per child per year. Applications opened on December 1st, 2022, and the first year of the program will cover expenses retroactive to October 1st, 2022, and until June 30th, 2023. You can apply for the Canada Dental Benefit through My Account, which is the quickest, easiest way, and most secure way to complete your application. If you apply online and are signed up for direct deposit, you could receive your payment within 5 business days. Did you know that you can also securely access CRA's My Account from your My Service Canada account without having to sign in again or revalidate your identity? The link will take you directly to your CRA My Account within a single secure session where you can then apply. If you are unable to apply online or would prefer to call us, please call the number on your screen. For more information on the Canada Dental Benefits, visit the web address on your screen. The government has approved a one-time payment of $500 to assist lower-income renters 15 years and older. This benefit is available to renters who have an adjusted family net income for 2021 of $35,000 or less for families, for $20,000 or less for individuals, and have paid at least 30% of their 2021 adjusted family net income on rent in 2022 for their own principal residence in Canada and can provide their landlord's contact information. For example, if the cost of your rent in 2022 is $500 per month, that means an expense of $6,000 for 12 months. If your adjusted family net income is in 2021 was $20,000 or less, then you paid at least 30% of your 2021 adjusted family net income on rent for your principal residence in Canada in 2022. Applications for this single payment opened on December 12th, 2022. You can apply for the one-time top-up to the Canada Housing Benefit through My Account. If you are unable to apply online or would prefer to call us, there is also the option of applying over the phone. For more information on the one-time top-up to the Canada Housing Benefit, including the online application form, visit the web address on your screen. Next, let's have a look at the Canada Caregiver Credit. This credit is tailored towards caregivers. The Canada Caregiver Credit is for those who support a spouse or common law partner or a dependent with a physical or mental impairment. The credit may also be claimed for an individual or their spouse's or common law partner's child, grandchild, parent, grandparent, brother, sister, uncle, aunt, niece, or nephew. An individual is considered to be dependent on someone for support if they rely on them to regularly and consistently provide them with some or all of the basic necessities of life, such as food, shelter, and clothing. When claiming the Canada Caregiver Credit, the CRA may ask for a signed statement for the individual from a medical practitioner showing when the impairment began and what the duration of the impairment is expected to be. However, you don't need one if the CRA already has an approved form T2201 for the disability tax credit for a specified period for them. The Canada Caregiver Credit is a non-refundable tax credit. This means it reduces the amount of income tax the supporter may have to pay. Another non-refundable tax credit you may be able to claim are medical expenses. You can claim eligible medical expenses that you or your spouse or common law partner paid for yourselves and your children under 18 years of age. You can also claim eligible medical expenses that you or your spouse or common law partner paid for certain family members who depended on you for support and were residents of Canada at any time in the year. In terms of expenses, you can claim a wide range of products, procedures, and services, such as medical supplies, dental care, and travel expenses. But you can only claim the part of an eligible expense for which you have not been or will not be reimbursed. So if you've received a portion of the cost you paid through an insurance claim, you can't claim the amount that was reimbursed. You should note that most claims don't require you to be eligible for the disability tax credit. For more information on eligible medical expenses and how to claim them on your tax return, visit the web address shown on your screen. One deduction you may be able to claim on your return is the disability supports deduction. A deduction reduces the amount of income you pay tax on, which reduces your overall income tax. If you have an impairment in physical or mental functions and you have paid for certain medical expenses, you may be able to claim the disability support deduction. You do not need to be approved for the DTC in order to be eligible to claim this deduction. You may be able to deduct the expenses you paid in the year so that you could work, go to school, or do research for which you received a grant. Only the person with the disability can claim expenses for this deduction. For more information on the disability support deduction, including a list of eligible expenses and how to claim them, visit the web address shown on your screen. Another government program that can help you with your long-term planning is the Home Buyers Plan. The Home Buyers Plan is a program that allows you to withdraw from your registered retirement savings plan, known as your RRSPs, to buy or build a qualifying home for yourself or for a related person with a disability. This plan allows you to pay back the withdrawn funds within a 15-year period. You can withdraw from more than one RRSP as long as you are the owner of each RRSP. Your RRSP issuer will not withhold tax on withdrawn amounts of $35,000 or less. Certain conditions must be met in order to be eligible to participate in the home buyer's plan. Also, if you buy or build a qualifying home for a related person with a disability, or help a related person with a disability to buy or build a qualifying home, the individual with a disability must use and consider that home as their principal place of residence. For more information on the home buyer's plan, visit the web address shown on your screen. There are a few ways to do your taxes. You can do your taxes online. This is the fastest way, as tax returns filed electronically are typically processed within 2 weeks. Certified software is available to make online filing easy, and some software products are even free. The tax software guides you and calculates everything for you, and it helps make sure you don't miss out on any benefits and credits. Make sure to also sign up for direct deposit, so if you're eligible for a refund, you can receive it faster. Volunteers may be able to help you do your taxes for free, and there are tax clinics hosted by community organizations across Canada for those with a modest income and a simple tax situation. For more information, go to canada.ca/get-tax-help. You can also get help from a family member, a friend, or a tax preparer. Or you can download a tax package, fill out the paper forms, and mail them to the CRA. You must use the package for the province you lived in on December 31st. To get a package, go to canada.ca/taxes-general-package or call the CRA at the number on your screen. As I mentioned, you may be able to get your taxes done by a volunteer for free. The program is called the Community Volunteer Income Tax Program. In Quebec, it's known as the Income Tax Assistance Volunteer Program. You're eligible to have your taxes done through the program if you have a modest income and a simple tax situation. Generally, a modest income is less than $35,000 for a single person and less than $45,000 for a couple. Your tax situation is simple if, for example, you don't have a small business or income from a rental property. Tax clinics are held all year. However, most clinics are offered in March and April. If you're interested in learning about taxes and volunteering at a free tax clinic yourself, reach out to us. For more information or to find a clinic near you, go to the web address shown on your screen. Taxpayer information is confidential. The CRA needs your permission to deal with another person, such as a family member, friend, or an accountant, who may act as your representative for income tax and benefit matters. You can give permission to another person in My Account or on paper by filling out Form AUT-01. Authorize a representative for online access and sending it to the CRA. Make sure to choose someone you can trust, and remember to check your account if you have changed tax preparers or representatives to make sure only the people you want to have access to your account can do so. You don't need to authorize someone as a representative if that person is only doing your taxes. I've mentioned My Account a couple times already during today's presentation, and now I'll cover this valuable service in more detail. My Account is a secure portal that lets you view your personal income tax and benefit information and manage your individual tax affairs online on your own. You can track your refund, view or change your return, check your benefit and credit payments and statements, manage direct deposit, change your personal information, view any uncashed checks, view your CRA's mail online, such as your notice of assessment, and more. Along with doing your taxes every year, you must keep your personal information up to date to keep getting benefits and credits. For more information or to sign up, go to the web address on your screen. In addition to My Account, there are many digital services available from the CRA. Here are a few that I would like to tell you about. Autofill My Return is a secure CRA service that automatically fills in parts of your tax return with information that the CRA has available at the time of your request, making it easier to do your taxes and helping prevent mistakes. Direct deposit is a fast, reliable, and secure way for individuals to get payments on time from the CRA in the event of an emergency or unforeseen circumstances, such as a natural disaster. Email notifications help prevent fraud. Email notifications from the CRA let you know when changes are made to your personal information in My Account, or there is a CRA mail to view online. For more information on the CRA's digital services, go to the web address on your screen. We would also like to invite you to try out our new online interactive tool called Learn About Your Taxes. Go to the address on your screen to dive in and check it out. This online self-directed tool takes you through starting your first job, completing a basic tax return, and the purpose of taxes. It has resources such as videos, common tax terms, and links to websites where you can learn more. There is also lesson plans for teachers and facilitators. You should always be cautious if you receive communication that claims to be from the CRA. It is possible to receive a direct communication from the CRA. We may, for example, need to provide you information about your account or ask you to clarify something you've shared with us. We will not ask you for your bank account number, credit card number, or passport numbers, or use threats or intimidation tactics. Scammers often attempt to imitate the CRA to try to steal your personal information. They may target you by telephone, text, instant messaging, email, or mail. Here's how you can be scam smart. Never be afraid to question why the CRA needs your personal information. When in doubt, check My Account or My Business Account to see if you have mail or any amount owing. You can also call the CRA to check on communications and go to canada.ca/b-scam-smart to learn about more. You can also check out our Be Scam Smart webinar on the individual's video gallery on canada.ca. I'll provide more details on this in a moment. And that's all for me. This is the end of our webinar. Thank you so much for joining us today. We hope it was helpful. And we also encourage you to visit our upcoming events page at canada.ca/CRA-outreach-events to view and register for any of our upcoming webinars. Thank you for listening and enjoy your day.